but you don't get it, this year. But yeah, so like as you mentioned, this one big beautiful bill that Trump passed with Congress a few months ago is actually July 4th. It got passed. There is a lot of sections in there, but there's a section in there that's pretty good for the new tax updates. So basically, 2017 was the last major bill that we had, and a lot of those tax provisions in that bill were set to expire this year in 2024 or 2025, I should say. So a lot of them got updated. So for general knowledge purposes, the tax rates in 2017 were dropped about 1 to 3% across the board for all different types of taxes and tax brackets. That's going to remain. That's the good news. The other good news is for small businesses, and the reason why I'm talking about small businesses, not only because it's what we focus on, but you got to remember more than 90% of business in the U.S. is small business. That's pretty much what our GDP is comprised of. Nearly 50% of the people in our country are employed by small private businesses. So that's pretty substantial. 61 million people is pretty big. So
The
this is
second
important
biggest
stuff that
employer
we should be
after the
aware
government,
of.
right? Is the
I'm
second.
sorry. Go ahead. Go ahead.
Small businesses are probably the second biggest employer after the federal government, right?
Yeah, 46%.
Okay.
40%, nearly 50% of our, 61 million people are employed, through that. So, and it's nearly 50% of our GDP. 70% of our tax revenue that the government, the IRS collects comes from small businesses. So it behooves us to pay attention to these laws. If you're a small business owner, you don't have to know everything through and through. Just get a good CPA that, can walk you through it, and it can work with you, such as you guys, work with me and just keep you updated on those things. It pays to have, a knowledgeable tax guy. Don't try to go it alone when you get a business. Just pay the money because you're going to save more in taxes than you are, trying to keep up with the tax laws and trying to do the forms yourself and the opportunity to take advantage of the tax laws and the code. Leave it to a professional. It really pays to get somebody that knows what they're doing.
So no TurboTax.
I'm sorry, say that again.
No
Fresh?
TurboTax.
No TurboTax. Yeah, oh my God, I could tell you how many times we got people coming in trying to do their business taxes. It's one thing if you got a W-2 and maybe a couple, maybe a couple of W-2s at the most, yeah, just use, that's fine. TurboTax is fine, or H&R Block or whatever, but once you get into doing, having your own business, you're going to want somebody to help you out, get your books straight, keep a separate bank account for your business so you could track your income and your expenses. So, just wanted to add that in there. But yeah, so this bill, I wanted to go over maybe like three, four major things for you guys, and then could open it up to maybe look at a Q&A.
Yeah. So guys, so we're gonna go over this stuff, and then we'll cover the basics, and then obviously we'll open it up for Q&A so that you guys can ask whatever questions. We're gonna open up the phone lines for you guys as well, and take super chats in. So you got our accountant on the line, guys. We're gonna bring Steve on more often for these Money Mondays. I think that can provide you guys an enormous amount of value, answer a lot of your questions. Steve also has a pretty good background in real estate investing, fixing and flipping, a bunch of different stuff. So accounting isn't his only expertise, guys. So
also, he can guide you on what to buy for your business legally to reduce taxes, and there's a lot for you. Because the more money you keep, the better.
So so we're gonna have Steve on these a lot more, guys, to give you guys even more value and have a tax professional on almost every one of these calls. So we got y'all, man. I told you guys we're gonna obviously increase the value and give you guys more, and that's what we're gonna do. And go ahead, Steve, take it away.
Yeah. So I wanted to add. So tell your guys, and I'll put it in the chat too, that on my Instagram, I haven't been active. Probably over the past year, I've been involved with some personal stuff, which you guys are aware of. But so I've kind of dropped off a little bit, but I'm going to start posting more content on there. And I do. If you go onto my Instagram, go in there. I have a lot of free resources in there for you. I got a calculator for you guys that you guys can go in there and see, like, hey, if I started my own subchapter S corporation, I have a calculator in there. It's pretty simple. You fill out like 3 or 4 pieces of information, and you could find out pretty accurately. It's not going to be precise, but pretty accurately, how much of a tax savings you would have by forming your own LLC and converting it to an S corp. I have very inexpensive guides on there. You could do a call with me, either a 30-minute call or 60-minute call in there, just but there are some free guides in there. So I would invite everybody to go on there, join my page. I'm going to be producing more content on there. A lot of times I try to do my best to answer DMs for people that, ask me a question through there, similar to this Q&A. So just feel free, to go on there and, see what resources that you need on there. So just kind of diving into this new bill or this updated bill. One of the big things that we were nervous about, including myself, because I'm set up as an S corp too. You guys are both S corps as well.
Yeah.
So this hits home. There was a 20% deduction. So for instance, if you had on your S corp $100,000 profit, we were getting what's called a QBI. That's a qualified business income tax deduction of 20%. So if you had a $100,000 profit, you would deduct 20% of that. So you would only have to report an $80,000 profit on your tax return and pay tax on the $80,000. So that was set to expire. That got renewed, and that's going to be a permanent. Trump made it permanent. So that's like
good stuff.
That's like big. Yeah, that's big. And that only started with him in 2017, and then now that's going to be so that's a huge deduction. 20% right off the top is huge.
Steve, what about the weight limit for cars? For example, the deduction from cars.
Well, I'm getting there. I'll get to that.
Awesome.
I'm going to get to that. That's going to be one of the things I'm going to cover. Yeah, and that you guys are going to like this too. And excuse me, I misspoke. It's not 20. Not only is it going to get renewed, it's not 20%. It jumped up to 23%. So I misspoke there. So that's going to be one of the big ones there. Now, going into the Section 179, what the heck is that, right? So when you have a business and you buy assets, let's say you're a content creator and you buy computers, you buy, cameras, you buy lighting and so forth. We have what's called, typically you would depreciate that. What is that? Well, you take the useful life of that equipment. Maybe it's 5 years, maybe it's 7 years. And you would take, if it's a $10,000 piece of equipment, or let's say it's $5,000 piece of equipment, you would depreciate that over 5 years. So you only get a $1,000 deduction for every year for the next 5 years. Well, Section 179, you could, as long as it's used in your business for over 50%, you could deduct 100% of that, whatever the cost of that is, as long as it's used for business. And so that went from small businesses, which, I know it's a big number and it's still considered small business in the eyes of the U.S., but we had a cap of up to $1.25 million of any type of business equipment that you would buy that you could expense 100% of immediately. That went up now to 2.5 million. They doubled the cap on it. So that's major, and of course with inflation, the price of everything has gone up. So that's only appropriate, I think.
So if people want to buy equipment, or they were looking at getting something more expensive, higher end or whatever, they can probably do that over the next couple of years.
Correct.
Yeah.
Correct. So that's jumped up to cap. So I know, a lot of businesses aren't going to be in that, including myself. I'm not in that, category where I'm going to need that much equipment, but there are businesses, there are construction companies that, they need to buy heavy truck equipment, and
brick and mortar companies that, still operate a storefront and stuff like that. So that allows them to buy more inventory.
Correct. And that adds up. It adds up very quick. So that's another one as well. Another one is the interest deduction for loans. So if you have, let's say, a small business administration loan, a lot of people do have those, and I see that a lot in my line of work. Although the rate right now is not the greatest, hopefully we're going to see the rates, maybe at the tail end here, this next couple of meetings we have here, they're going to drop down a little bit. So it's not ideal right now to get the SBA because the prime plus 2 typically is kind of high right now for that. But at any rate, the deduction for the interest, they used to have a 30% cap on it, based on your taxable income that you were spinning off. You could only deduct up to 30% of that. Now you could just deduct 100%. So that's a new one as well. Another one is going to be, getting back to what Fresh was talking about, is the vehicles. So now what we have, if you have a vehicle over 6,000 pounds, there was this thing called bonus depreciation, right? What is bonus depreciation? Well, that started in 2017, And in 2017, it was 100% bonus depreciation. So if you bought a vehicle that was over 6,000 pounds, you could deduct, if it was used for business, you could deduct 100% of it. And then in 2018, that went down to 80% and so on and so forth. So that was set to, like, I think we're at 40% now. That was set to sunset, meaning that it was going to expire. It's going to go 100, 80, 60, 40, 20, 0. But what they did now for next year, for 2025, they jacked it back up to 100%. So for 25, 26, and 27, it's 100%, 100%, 100% for the next 3 years. So
Let's go! So that means, just to add to your point here, Steve, if you get a car now, it's on a discount price. Prices are really down on cars. Values have lowered. So you get a car over 6,000 pounds, and you add in depreciation, you could win really big on cars now. So that's really W.
So would it be fair to say, because obviously we've been talking about the car market being trash and, for a very long time now, would that be, I guess, the only situation where buying a car would make sense now? Is if you have a business and it's 6,000 pounds?
That helps a lot, 100%.
Financially at this point?
Yeah, it helps. And I'm in Florida here, so we got a ton of construction. So this applies. I got, these owners are buying a new, huge heavy duty truck every year, heavy duty equipment. So
truckers as well.
Yeah.
Yeah. So this,
because we've been doing a couple of episodes. And the reason why I say this is because we've done a couple of episodes on like the car market and how it's a really bad idea to buy a brand new car nowadays or purchase cars in general. But it seems to me, based off what you're saying with this, bonus depreciation, it making a comeback, it seems as though if you're buying one of the few exceptions is if you're buying a car for business over 6,000 pounds, then it can financially make a good amount of sense to purchase it.
Yeah, so let's say it's easy to get to $250,000 profit these days on an S corp, and you're flowing that through. Let's say you have, you buy a truck, $100,000, that you're basically cutting your profit almost in half.
And not only that, it's the purchase price, right, Steve? Not what you actually put down.
Correct.
So that's really important for the audience to know too. It's based off the purchase price, guys, not what you put down.
And let's say you're at almost like a 30% tax rate. So you could do the math. That's a $30,000 deduction in your taxes that you're just basically taking that 30,000 that you would have paid on your taxes and you're putting it towards the car. So it's really costing you, let's say, 70,000. In essence, it's costing you instead of paying it to Uncle Sam, you're putting it to use for you. So that's a big one.
And if they cut rates this Wednesday, like they should. You're going to get way better rates for your loans. And, of course, prices will go up. So if you use that to your advantage, wait to buy a car, then for business, if you're a business-savvy person like someone in finance, for example, someone that does like a lot of meetings, get yourself a G-Wagon for a really good price. And, of course, with the rates being lowered, it should be better for you as a business as well. So it's pretty good.
Yeah. I'm seeing a lot of people, they're just tight. Nobody's spending money. Like you said, the car market it's kind of like, the same thing with the real estate market. Inventory is going up. Things are slow. So I think, this guy's got to